The whole gang is back. It's Monday. We had a brutal record sell-off last week, and we came through the other side. And there's some weird things happening in the underbelly of where we are today. But before we jump into today's story, I want to thank everybody for coming. The mods in the chat. Links below for these legends, and we're streaming on all our channels as well. But let's go around the horn real quick. Mando, welcome back.
Yeah, sorry for leaving you dry last week.
Must have been good time to be away, actually.
I know. I feel like I've missed some real humdingers, but yeah, it was a crazy week. Absolutely insane. That 58, 59K hit. I didn't think we'd fall that quickly, that fast, but good rebound, and I think we're now looking like we're back into that range we were in 2024. That kind of, when we hit 71K, I think like 11 times. I think that's going to be a difficult one to get through, but hopefully we can.
Yeah, and the V-shaped recovery was pretty stunning. Like literally within less than 30 hours, drop 10K, back up 10K. So that tells you there's bigger manipulation players involved. That was not an organic move. CTO, you made it. You survived.
Great to be here. I have some charts. We will look at it today. Absolutely.
Yeah, I think the big question we're trying to address right now is like, okay, 2025 was lost. 2026 got off to a very bumpy start. Is there any hope? Or should people be playing with something else for the next year and then come back if it's a traditional bear market? And Marty, what do you reckon?
Yeah, I had a great weekend. I went to the Waste Management Golf and had a good time. I mean, obviously it was frightening for everybody, but this is what a 50% retrace looks like. We've retraced pretty much January 2023 or January 2024, 50% back to the Trump inauguration price. That was our low. So we're back here where we were. Everything above Trump inauguration might have just been hopium and speculation. We'll have to see. But I feel good about this being a sort of bottom formation. Obviously, everything before market structure, like I always say, I don't think the markets are very valid with the amount of manipulation. So it's all speculation based. And this is what it looks like. So here we are. Nice to see you guys. And let's talk about it.
It is actually interesting when you go back to November 2024, right before the presidential election, we're back at that exact price. So 15 months, 14 months flushed down the toilet. Let's get into today's story. This is called Crypto's Final Test. And people are being tested by crypto and they don't like it. So the question is, where are we now? We have entered the deep phase of what is now everybody. The whole narrative flipped last week. People weren't sure if we're in a bear market or not. Now everybody's saying, yes, it's a bear market. And yes, we just entered the deep phase for the first time in years. The question is, how deep do we go? So we've seen diminishing returns. The question is, will we also get diminishing drawdowns? Like, is the pain in, or is there more pain to come? There's lots of talk of the super bears are saying, well, we're going back to 15K, 20K. Other people are saying 50K is on the cards. Remember, we did hit 59K last week, if I'm not mistaken. So 70K was the number that many people pinned would be potentially the bottom, which is exactly where we are now. But we did breach that by another 10K. So who wants to take this first? I'm going to give it to you, Mando, first. Entering the deep phase, what do you think? We're now, what, 46% from the peak. We went above 50% dip. Do we struggle here for the next year? Or will this be a shallower drawdown with a faster return? And I know it all depends on the money flow, who's buying. We'll get to some of the who's buying in a minute too.
Yeah, look, I thought we'd show a little bit more support at that bottom we hit in last year when we got down to about 75. We basically just smashed through that, which kind of takes us back to the 2024 range. That range was kind of between 55 and 72, 73. I think we'll probably be in that range for a little bit here. We were in that range for a long time, nearly 8 months, look like. So I think that's pretty well defined. I have to say that, like, if I'm just looking at the charts, this is still a downward trend. Like, we need to see a pretty strong reversal if that we're going to break back above the like being a bit more of a bull trend. So that would be kind of above like 85k. I think it would start to look like we're really starting to reverse this. So it's quite a way before you can start saying, hey, we're back towards a bull trend, in my opinion. I think that for that to happen, I'm still of the view that something needs to like break almost for like in the fiat system for crypto to be looked at again. Like gold is going higher still, it's rebounding quite nicely above 5k now. So you still have the debasement trade pretty strong. You still have the weakness in the dollar trade pretty strong. You had China coming out today and telling its banks stop holding treasuries, which means that the whole trend of moving away from the dollar and also debasement around the world is still a very, very strong trend. Bitcoin just is not really reacting to it so far. But I do think that...
Let's double click into that. The debasement trade was, touted by JP Morgan and all the big TradFi players. And the most important asset for the debasement trade failed while everything else went up. Yeah. What happened? And is there something? A lot of people are very suspicious. Maybe something is keeping a lid on the price. Also, the haters love it. They're saying, "Oh, you're saying Bitcoin's an inflation hedge," when really it completely failed. Didn't work. What's going on? Any theories?
That doesn't help. I think like the idea that gold is going higher and Bitcoin literally got smashed, it does hurt the narrative. Like if BlackRock's going on CNBC and saying, hey, this is digital gold and it's getting absolutely smashed, it doesn't help. There was a tweet last week which was like the 15 reasons why. And it was a mixture of things like, it's become more corporate, it's more political now in the US, it's kind of seen as more US centric rather than global, and that's hurting China. It's quantum, it's this, like there's so many different things right now. I do just think it's just like narrative is just following price over all this sort of stuff. Like some people are, there was a tweet or a quote actually from Mike Novogratz who's saying, oh, if somebody sold their Bitcoin, he was worried about quantum. I think when you sell Bitcoin, you kind of have to give a reason why. I don't know if this is actually like quantum seems, more I look at it, I'm just like, this could be a long time before this is really, really a worry. I just think that right now there's just a lack of faith and that can turn back up. There was an article in the FT over the weekend, and if you saw it, which was like, oh, Bitcoin's still 70K too high. And it was like, oh, there's the greater fool theory is dying. You're able to write articles like that right now because everyone's just feeling a little bit depressed. But when the price goes up, everyone shuts up and everyone's just, okay, this is the greatest innovation ever. This is a better version of gold. This is easy to transfer. This is easy to store. This is just a better asset. I think that will come back very, very strongly just with price. It's just right now we're just seeing what seems to be a replay of the 4-year cycle.
And price always overshoots to the downside and to the upside. And we're now maybe seeing some of the downside stuff. Let's go to you next, CTO. What do you see in the world? And is there any hope for us right now? We had that beautiful bounce, the 10K V.
Absolutely. I can add one thing on the previous slide first before we go into the chart that I think is interesting. So there's two things to observe here. One is that the drawdowns, the past 3 cycles have been roughly the same. So 80 to 85%. But they have been slightly less. I think the last the final drawdown was 79%. I think in the previous 2 were 85%, and then was 90%. So they've been a little bit less, but not so much. But there's another thing to observe here also, and that is that the previous 3 drawdowns from top to bottom have been the same duration, about 1 year. So if that repeats, that would put the bottom in October this year. Of course, we don't know that yet. Just because something has happened 3 times doesn't necessarily mean that it has to happen the 4th time. But it is an important observation. So for me, that's at least one scenario that I'm looking at, that the duration will remain the same also the 4th time. And that I think just like you said, James, when the upside has been diminishing, perhaps the drawdown also diminishes a bit, that the drawdown is not as severe this time. I actually guessed on 50%, but now we've already hit it. So if there will be another bottom in October, it can't be 50%. So I have two scenarios here. One is that it will largely repeat and that there is a deeper drawdown and bottoming in October. But anything that tries to predict, I think, is will lose sooner or later. So this is a scenario for me. At the end of the day, I will just react to what happens in the price, because exactly like Mando said, the narrative follows price. I think the reason that gold has gone up is that there's been a lot of buying of gold. The reason Bitcoin has not gone up is that there hasn't been a lot of buying of Bitcoin. That's it. And then all the other narratives just follow from that. So I think no need to overcomplicate it. If we get some big buyers of Bitcoin, price is going to go up, and all those 15 reasons or whatever it was, it's 180 degrees on all of them.
There's something that you triggered an idea in my head too, CTO, and I'm going to give this one to Marty. When you do look at this chart, first of all, the duration is sort of the same, but it's actually not, because it does get shorter by about 25 to 35 days every cycle. So the duration is going down. So that means this current drawdown, if the trend continues, will be about 300 days, not 365. And the second thing, if you ignore the big spikes down, the historic drawdowns without those big sharp anomalies towards the very end of the bear market only hit 70%. We're at 50% now, ballpark. So technically, we are way closer to the bottom than we are to the top. So it would be a good time maybe to DCA in if you believe in this asset class. Marty, what do you think about that? 70% history pulling out the anomalies, which are, a lot of bad actors, bad players. It wasn't a bona fide asset class. There were no ETFs. There were no treasury companies. Saylor buys every week, etc. Where do you see this going? Duration and depth of drawdown.
I think, I look at the weekly logarithmic, right? So, which basically foretells diminishing returns. So, yes, I believe that the drawdown will be lower than it was, and so will the all-time high. I think that this is the great reckoning where everybody on crypto Twitter, everyone in TradFi has realized that this is a manipulated asset class, and that the price, when we say the price, I think people assume the price is regulated and audited and valid. And I've been saying for years, I don't think the price is that at all. I think it's synthetic. It's made up by the dominant exchanges, and they have complete control over it. And if they let go their mechanism, then everyone buys Bitcoin and it goes up to all-time high, including BlackRock and Saylor and everybody who thinks they're bigger than hip hop. They think they're the guys. Well, I think this is a sharp wake-up call to them, that at the end of the day, we still did the three-headed Wintermute pattern with the 50% drawdown, just like clockwork, like we do on all time frames. So at the end of the day, you can buy all you want, but these guys have control over the price. And they did it. They took out all of their longs, literally to the last long, which they're sitting at right now. Back to the Trump inauguration price, literally. So everything above that was pure speculation as far as they're concerned. Now, where do we go from here? If you look at the weekly logarithmic, there's two scenarios, right? Either we continue this V-shaped recovery, bouncing off the accumulation zone at 68, which we've just done again, and we shoot back up to the trend line at 95, or we do scenario 2, which is deep down to the bottom weekly logarithmic trend line, which sits currently at 58. That's coincidentally, the weekly 200 SMA. So we're sitting on the 200 EMA. We could come down to the 200 SMA, which will complete just like we did in the first bear market in 2023. We would touch that bottom trend line at 58 and then do the V, continuing up the trend line there back, and gather steam again, doing a full typical manipulated pattern. So I think those are the two scenarios. Either we see a V-shaped recovery now, continuing up, or we drop one level lower, one Fibonacci lower to the 68, the 58, which would take out the 10x leverage positions. Yeah. So from a derivatives perspective, there is room to go. There is a lot of long still. There's about $1 billion left down to the 8 and 10x positions. But above us, guys, there's 26 billion in shorts to liquidate back to just over 100,000. So that's optimism. If you want optimism, there's a lot more liquidity to the upside. The problem is that buying Bitcoin people think buying and selling has anything to do with this. I disagree, and I'll continue to disagree. I said it on the weekend. There is no market in crypto until there's market structure. It's all invalid. Nobody audits the Binance price. When people buy and sell on Binance, nobody audits whether that order book is actually valid and honored. The actual price submitted into the cryptoverse is whatever they say it is, and we don't know what it is. So until we have market structure and some kind of, regulations and consequences for that, I think they can do whatever they want. So they're running their own playbook. Now, the agenda is what we need to question. Why is Binance manipulating the price? Is this potentially one of the other scenarios, which we can talk through later, which is there was that large $1 billion Ethereum position from Trend Research sitting down at liquidation 1830 on Ethereum. We came down to exactly 1830. Maybe that was the agenda, was to liquidate that position. Maybe this is, IBIT traders, option traders going, well, there's more liquidity on IBIT options than BTC native on Binance. So let's sell our Bitcoin and buy IBIT shares and trade IBIT options. So it's going to be a V-shaped recovery. There are lots of scenarios, but at the end of the day, I think, we're following that logarithmic weekly pretty accurately, and I'm going to stick with that for now until it completely breaks down under 58,000. But the most important thing is we're at the Trump inauguration price. I think people forget that. That is really interesting. Anyway, that's my thought.
We ran the clock back 14 months or 13 months, whatever it was. CTO, tell us about the bounce and historic resistance support levels.
Yep. So the trend is still down, guys. It turned down in October, and that's the fact. Trend turned down in October, and it has continued down since. That's the start and the end of the story. And it feels like we had a huge recovery, but when you see it like this, it takes a lot more than this to turn the trend up. So we haven't turned the trend up yet. What we have done, which is positive, is that we bounced on a key support. This support here broke, but then the next support, which came from 2024, where it bounced many times, and that's where it bounced again this time. So hopefully this holds here. That would be great if this turns out to be it. It was a 50% retracement. I think 52% from top to bottom, 52%. And, that could be it. If it breaks, where's the next level? If that's October or September, as you correctly point out, James, could be a little shorter, say September or something like that, where would the next support level be if it breaks? I'm not saying it will break, but we can have some qualified guesses of where it would go if it breaks. Here on the right side, you see something called volume profile. So that's price where a lot of Bitcoin have changed hands. And this dump here went into the bulk of that area, and then it stopped. The next bulk is down here at 40 to 44K. So if this breaks, I'm interested to add here at 44K. I actually bought some on this support bounce here at 62K something. I didn't catch the exact bottom of it, but 62K is somewhere here. And because it was a good bounce, and let's see. And it bounced at the kind of expected level. And if it breaks there, the September, October could be down here.
It's funny you mentioned 42K, because that was my previous bull run back in 2021, or with the price at which to stop buying Bitcoin.
I remember you talked about that, James. Yeah, you said that you will buy Bitcoin up to 42K. I remember.
Yeah, of course, but fatter layers at lower prices. Anyway, interesting. Let's move on with the agenda. We have more stuff to cover. Thank you for that. But I think the overall thing is we're closer to the bottom than the top, and I think that's
definitely.
Big
I think
method.
one good point to point out, because I think all of you getting the same question. People have held it from 120 down to 60. Now it's like 60, 69. And asking, should I sell now? And that is really chasing. It's chasing after an exit that is long gone. And I mean, I cannot tell anyone what to do, but chasing after an entry that is long gone usually isn't a good idea, because you're kind of late. The smart money have bought way before, and maybe they are selling now when you're buying. And it's kind of the same thing if missing the exit and then holding it all the way down and then start selling when the other people maybe are buying back. You're also like out of sync. I'm not saying it will work or not work this time, but as a principle, it's not the right thing to do. You missed it. Okay, then try to get the next wave or be better next time, something like that. Yeah. Don't be like always out of sync. If you think like a sine wave, like you cannot be half a swing late the whole time, because then you will always buy high and sell low and then repeat it over and over.
Well, I did find some evidence that CTO did buy the dip. $5 billion worth flowed into Whale's accumulation addresses during last week's dump in a day. This was the single biggest inflow in a day in over 4 years. So somebody is making moves. Do you make anything of this at all, Mando? Is this just random, or are they, long-term holders, Whales? They did distribute a lot last year. Are they back?
This is exactly what you want to see. So like I said before, I was a big narrative person until we started breaking below 100K. And then I was like, well, the narrative doesn't make sense. So something's happening. And that was seemingly Whales selling because of the 4-year cycle. And that was underestimated by myself for sure. The main signal for me would be that cohort starting to buy again. Long-term holders starting to buy. That would probably be the number one cohort, because I think number one thing for me, because a lot of the things around the narrative make sense. As we've already said, like a lot of things look really good for Bitcoin here. So it's really now just about the technical flows. So seeing Whales buying, not just on a single day, but you start to see accumulation of by longer-term holders is like the main thing to be looking out for.
We have a lot of people that are frustrated by the fact that gold is the faster horse. So I put this little chart together of the 1-year return, 5-year return, 10 years, 15 years. Of course, if you were into Bitcoin early, you did very well. Even 5 years ago, you made 200%, which is not a lot compared to the past. This is a log scale as well, by the way. But over the last 365 days, we lost 7%, and gold gained 68%, and people are not happy about that. Anything to make of this? And it's a reminder for people, timing is everything. But will this continue? And this goes back to what we discussed at the very beginning, Marty. Diminishing returns, or a mature asset, or the super volatile, super high return days over? Or my theory is, because of what we saw happen to gold and silver, Bitcoin will have its day. We just don't know when.
In my humble opinion, I believe that this was all a correction, and we will return back to our original trend with global liquidity, just as we thought we would originally. I don't think anything's changed. The blockchains have only got stronger. The software has only matured. Including the quantum report now coming out of the Saylor strategy. I mean, everyone is addressing everything. The software is only improving. The use case has never been better for blockchain finance. Regulation has never been stronger. We're on the dawn of market structure, which will cleanse all of the bad actors and impose consequences on manipulation. So I just think fundamentally everything has never been stronger. The decoupling of the dollar price to the blockchain tokens has never been further. And I think that's the problem. And gold had this problem. I mean, if you talk to someone like Lawrence Leopard, they were just as frustrated for many years on gold and silver as we are on crypto. Why is it not going up? And it was the same old story, just large players placing leverage bets and creating suppression. And once that suppression was released, gold ran to its true value of 5,000. Silver ran to its true value of 100. And I think we're dealing with the same players here. Large players suppressing the price in order to accumulate, chasing large leverage positions. And once that's released, I think we will return. It always leads with gold and silver. People, the cycle always leads gold, silver, global liquidity, and then we get to risk on. And so we're there. This is what it feels like. We're not joking. This is literally what it feels like. You always get frustrated. Why is it not moving? It's not moving because it's suppressed. People are making a lot of money on the bullish sentiment. People are longing and buying, and they're simply shorting and selling. And they're taking the spread. And it's a money-making machine.
Exactly. Mando, you remember for years, the debate was always running, does Bitcoin price follow the hash? Or does hash follow the price? We're seeing a deviation. I used to believe that Bitcoin price followed the hash because the more hash, the more secure the network. And therefore, the more secure the network, the more adoption there is, the more price goes up. But now we're seeing a historic 11% drop in hash rate after a big dip before. The cost to mine a Bitcoin is around 96,000 today. And with the price down below, it just, the mechanism auto-corrects itself. But any concern here about the hash falling out of the sky so fast?
Well, I think obviously this is going to make it far more miners are not profitable in certain regions of the world when Bitcoin drops like this. So this just seems like a naturally correcting thing. I mean, I don't know which one follows the other, but for me, this would just be naturally miners, which a lot of people are talking about at the moment. They're saying that miners are going to be really, really tight here. We're very close to their energy costs. I think we could see more and more switch to the AI trade, right, which has been quite a profitable one for them to kind of move towards. So I think it's just a mixture of those. I wouldn't get overly worried by this. It just feels like a naturally corrective sort of thing.
Yep. And it did go on a rampage last year. The hash rate just went up 60% in the space of a few months. CTO, this is an interesting theory, and we'll talk more about AI crypto convergence because we had some big news as well this week so far, and it's an early week. But in terms of hash rate, there's a theory that many of the Bitcoin miners, particularly in the US, they are unplugging their machines and using their energy for AI compute. And that's what's causing the hash rate drop. Any theories on that?
I didn't know that, actually. I thought it was simpler. It's just price dropped, so they're not profitable at the moment. I think many miners kind of run as aggressively in the sense that price has to go up for them to be profitable. They're not profitable in the moment. And then if the price actually drops 40, 50%, they're simply not profitable. So they take a break. But yeah, I don't know if they are using the energy for something else. I'm not sure. Yeah, I don't know.
Okay, let's move on. Then there's the whole thing of, and Marty, this is kind of an interesting one for you. You talk a lot about regulation and the act that we need, the Market Structure Act, to stop the bad players. But there's so much concern that, we know why 1010 happened, that black swan. February 5th, flush risk. That was a huge crypto native liquidation event because many believe it was a TradFi unwind. And of course, some manipulation in there too. But now everybody is really worried because the whole thesis for me getting into Bitcoin in the first place was scarcity. Now we have, just like gold and silver, many multiples of the amount of 21 million Bitcoin in paper forms, derivative forms, future forms, IBIT option forms. How big of an impact is that having on the scarcity thesis? And does the scarcity thesis go away?
Yeah, I think no doubt. I mean, the evidence is coming in, by the hour right now that we're all aware that on October 2nd, before October 10th, 8 days before, the CME, the largest venue in the world, trading IBIT and Bitcoin-related options, changed their structure to allow unlimited contracts, breaking the $25,000 limit, 25,000 contract. And then October 10th happened 8 days later. So, all evidence points that, there's large players, specifically out of Hong Kong, that, just like traditional Binance manipulation, are using their own strategies against Bitcoin options, using, delta neutral strategies and playing the volatility. And so they have to buy and sell Bitcoin at the right times in large numbers and then short and long to create the arbitrage and make billions of dollars. and it's unregulated. Once again, all eyes point to leverage trading and speculation in an unregulated market structure. There is no regulation. And if this is the case, all it means is that the players got bigger, so the moves get bigger, the buying and selling gets larger, and we land up where we are now, where these unwinds just get catastrophically large. And remember, any large unwind from a fund will simply trigger cascading sells of longs on the standard futures markets. So you get these cascades that we've never seen before. So I think it's just an escalation in an unstructured, unregulated market, people making money using that unregulated market, and market makers and funds profiting. And it all makes sense when you look at the timing. The October 2nd date, it's all just too coincidental. I point once again to the lack of market structure and the ability for these players to just take advantage, just like George Soros did with on the foreign currency market. They're taking advantage of this stuff using these vehicles and making ridiculous amounts of money at the same time, at the expense of the asset's spot price.
And the customers of places like Binance too. So this new theory from Leonidas,
yes,
CZ trades against his people. These two market, not just Wintermute this time. This is Merit and Sigma Chain. Mando, TradFi background. Do you believe that CZ is still doing shady things? I'm putting you on the spot.
I think he definitely was. And I think you see this from a lot of major exchanges. They have a huge amount of information about what their customers are doing. If you have that much data, Binance is a huge amount of the market, right? If you actually look at the percentage of spot and derivative volume, if you see Binance internal customer flows, you can have a pretty good idea about what's going on, what's going to happen in the market. I don't know if they're trading against it, but could they be front running? Could they be doing, like we've already said, maybe like selling through intermediaries, like market makers? That could always be the case. I think there's a huge amount of opportunity, let's say, for Binance to abuse their power. They've done it in the past. I think CZ, he has a mixed relationship, I would say, in crypto. I don't know if after going to jail, he would necessarily jump to doing that straight away, but I'm sure there are some people at Binance that would like.
Yeah, or you could have like a arm's length entity that operates silently on his behalf to pull these strings. Like he did it his entire life.
Yeah.
And he knows how to do it. And it's kind of, when it's so easy to club people over the back of the head and take their bags, it'd be hard to kind of give that up maybe for him.
One thing I would say is that like there's been some very public, because of the rise of decentralized exchanges, there are some very public liquidation levels on a lot of different crypto. As Marty said, like there were some huge ones on ETH that were
huge. $1 billion.
$1 billion for Trend Research. And then Garrett, Garrett Bullish, he's known as the guy who made so much money on 1010. He had a huge level too. So there was no doubt there was hunting last week. Like that when we dropped below that 78K level and we started to go down to the 70s, it was kind of clear what levels they were going to go for, particularly on things like ETH, but there were some big ones on Bitcoin too. So I do think the speed at which we sold off was really a reflection of liquidations, and that's probably why we've had this rebound. And maybe maybe big exchanges are to do with that as well.
Yeah, I mean, I summarize what Mando just said. I think you live by the leverage and you die by the leverage. The problem in this asset class right now is we have tremendous amounts of leverage, literally 90 to 10 levered. And, it all works great. It pumps the price to all-time high, but then when it unwinds, it dumps the price to all-time lows. I mean, it literally is devastating.
Yeah.
The DFDV's CEO, Parker, wrote a brilliant tweet. I mean, do you guys mind if I just quickly read you a couple of lines of it?
No.
He said, "This is my hypothesis on what happened between October 10th and February 5th, based on breadcrumbs and circumstantial evidence. This move has nothing to do with the fundamentals of Bitcoin or Solana and is everything to do with the technical market microstructure dynamics. Clarity Act should help fix some of this because the root problem is that the spot BTC market is not nearly liquid enough to support all these derivatives. BTC Spot is supporting perps, CME futures, ETFs, options on ETFs, derivatives on the ETFs, derivatives on the CME futures, and a host of OTC products. You know, we need the market to have more liquidity. We need more regulation, because when these things unwind, there isn't enough liquidity. And you all know when there's an illiquid market and you have these kinds of unwinds, the moves are devastatingly exaggerated. And that's what we see now. And that's
Yeah,
Can I add one thing? Can I add one thing on this topic also? I think what Martin said here, I agree 100%. I mean, it's a very liquid market for these kind of huge trades. And I think that's the reason why it is so volatile. I don't actually agree with the sentiment that it's Thesis' fault that is dumping and so on. And I want to say that I have not seen any convincing evidence that of these very serious wrongdoings. So I don't want to be part of making those allegations here on the channel. But you know, maybe there is, maybe it's not. But I am not really.
And to be clear, we're not making allegations. We're sharing news that other people made as well. Okay, so it's tricky stuff. But let's move on to this one, which is kind of Bitcoin owners. There's interesting stats here when we look around the world as to who owns the most Bitcoin. And the adoption's going up. And the first of India, number 1, 93 million. US, number 2, 46 million people, which I think is kind of high, considering it's 350 million people. That'd be like, well, 1 in 7. China, 41 million, despite the bans and everything else. Nigeria, 18 million. Then Vietnam, 17 million. Indonesia, 14 million. Turkey, 12 million. Philippines, 10 million. The places that have a kind of bad banking infra tend to have higher adoption. So Bitcoin is by no means dead. It's a lifeline for many people in many countries that don't have. We saw some terrible things happen to banking systems and currencies in Iran over the last month or so. Any thoughts on this data? Is it real or fake? Or does it represent the danger and weakness of fiat systems around the world? Back to you, CTO. You've lived in some of these countries, I think.
Yeah, I mean, it's interesting that China is the most interesting one, right? They banned Bitcoin again now. It's been every year for, I saw some chart, it's like 12 years in a row or something like that. They banned Bitcoin. But I think Chinese people like Bitcoin and crypto because they like the speculation element of it. They like the opportunity to move money out of China instead of having to do it through artwork and other means. People in India maybe like it because it's a ticket into the real Western financial system. People in Nigeria, thousands of different reasons. Vietnam, you go there, every street fish salesman on the street corner is trading altcoins. Indonesia as well. Philippines, everyone's into crypto as well. And then we have a long list of countries which have had very unstable currency. And then they have to use Bitcoin. What else should they use? And I think that all these things add up. Of course, we only focus on the US usually because US is the best, the most articulate, and also like the thought leader in this industry. But the world is really big. There's a lot of people in Asia. It's growing very fast. And I think they have a huge impact on the price and the market.
I think the most interesting thing, James, just from looking at that slide and knowledge, India has 2/3 of its population under 35. Did you know that?
Yeah. Yep.
So there you go. I think that is basically a graph of populations, young populations. The younger the population, the more they tend to be invested in this technology. And India is by far a millennial Gen Z focused culture. And so I think that's what explains it. And you can see the US and China following behind.
I actually did a chart years ago. I compared the level of authoritarian governments and Bitcoin adoption too, and there's also a very direct correlation there. So if you put those factors in, like level of authoritarian governments and youth of the nation, etc. But this brings me back to the point that Mando made at the very beginning, and I always say that Bitcoin loves a crisis. Will there be another fiat to implode in 2026, and could that kickstart Bitcoin as well?
Yeah, for sure. I think that's kind of what it needs, honestly. But I also think that it when I say implode, it could just be that we need to start printing money again. You know, like in some of these big economies too. You know, the US will never not pay back its debt, as will several others of these countries. But if interest rates get too high and they've got the amount of interest payments that they've got at the moment, like they're going to have to start printing money or reduce interest rates. So I think it is all slowly imploding. I think Japan's the most obvious case for this year that could wobble.
Yep.
The US is kind of a bit of a dark horse at the moment. Like if rates continue to go higher, even just because of selling by foreign institutions, that could be an interesting situation here. But yeah, this is just kind of the point. Like the narrative around crypto, in my opinion, has never been stronger. It's never been stronger, but the price, you just have to respect it. So what we just need to be appreciative of right now is just when the cohorts, particularly the whales and long-term holders, are buying. If they are buying again, then the narrative can pick back up very, very quickly. Very, very quickly.
Good. Now, one other thing which is super interesting as well, and we've spoken about this before, is the convergence between AI and crypto. The whole world thinks, okay, we have these AI agents, which are very like Skynet now at this stage. They're creating their own private social networks and everything else. They are using meat puppets. They're paying meat puppets, which are humans, to do things. Did you hear that story? It was very funny. I don't know how much this is real or not, but it's crazy. But this guy, Chris, who is the co-founder of Crypto.com, just spent the largest amount of money ever in history on a URL. The domain AI.com he bought for $70 million. And he believes he wants Crypto.com to be at the center of these AI agents, but using crypto to fund all their activities. Who wants to take this one first? I thought this, we've spoken a lot about how crypto and AI are going to come together. The traditional finance rails cannot scale at the level that AI needs. But to you first, CTO, as a technologist, did you hear about this, and does it take you by surprise?
I did, and it did not take me by surprise. I think that it's a very smart move, and I hope, exactly like you say, James, that it will lead to some convergence use cases, because we haven't really seen it yet. Like it seems like a very easy win. Why not give these agents some crypto? And they're not going to use credit card, guys. So it will be crypto money that they use. And I think it will come. It's just early. These AI agents are amazing, but I don't know. I have not spun up one of these AI agents on my computer to work while I go to bed. I feel still that, I might wake up and it has sold my house, divorced my wife, and, sent away all the Bitcoin. So I don't really, it is still early. It's an incredible technology. It's going to get better week by week, month by month. And for sure, we need to fund those agents so that they can do stuff and buy services from meat puppets and other agents. And they need crypto to do it.
Exactly. So now we're calling ourselves meat puppets. Is that an album or a song or a band or something, the Meat Puppets? I don't know. But Marty, as a technologist, talk to us about any updates on convergence and what you see happening in the AI agent world. And have you spun one up yet?
Yes. We have, in my community, we have some people working on open floor stuff using our models. But I think it's a narrative that's very much under the headlines. 98% of trading right now is done by bots. People don't know. It's not people buying and selling crypto. It's bots. It's already happening. It's called agentic finance, and it's massive. It's seen a 600% jump in 2026, this year alone, 600%. And the people involved are people you can't believe. It's Oracle, it's banks, Goldman Sachs, Lloyd's. They're all implementing agentic, Claude-based, OpenAI-based agents, and they're not using credit cards. They're not using ACH. They're using crypto. They're keeping it very under the cover, but they're all in R&D. The sandbox is growing. This is the future. So yeah, absolutely, it's happening. Agentic finance, it's called. That's what it is. Agentic finance. It's accelerating from pilots and hype to scale deployments. They're starting to measure ROI on it. There's a lot of strategic repositioning. My brother is a partner at Deloitte in Australia. They're doing a sandbox. It's one of the big 5 accounting companies. This is huge. This is going to replace accountants worldwide. Okay. So yeah, watch out for it. And remember, it can only happen on fast, extremely cheap blockchains.
Exactly.
So, interesting. Yep.
Finality in seconds, and you could have 1,000 agents running 1,000 transactions every second, and things will get pretty wild. 15 TPS is not going to cut it. Mando, I know you track all this AI craziness and AI agents, and the world is, many people argue like either one, you don't know you're in the singularity till you're actually in it. You don't recognize it. And even when you're in it, you don't actually realize it's already here. A lot of people believe the singularity has arrived, especially with the events of last week. What does that say for us in the space today? And how do we prepare going forward? I know it's a very loaded question, but I know you think about this a lot.
Yeah, I think just try and test out some of the stuff. There's been a few different people. So ever since Claude Code got announced, a lot of different other major AI companies have been announcing their agentic model. I know ChatGPT did for enterprise, and you're starting to see this chat about this from pretty much every single one of the major LLMs or AI companies, let's say. So there's that. There's also there's still this world around OpenClaw, which is I think it's changed its name a few times, but this is like open source kind of agentic system, which people have been. You have to be a bit wary about this one. This is the one that everyone's been giving access to everything.
Yeah,
but you have to be wary about what you give access to and what you what scripts you kind of attach it to. But it does seem to be people are making massive gains, or at least massive changes to their lives using this sort of stuff. Efficiency gains. So I would just test them out. Like I use Claude Code quite a lot actually now on a daily basis, and that's not just doing useful things. Like it does useful things for me quite a lot. So I think testing out using an AI agent is probably the first step of this. Some people are like pushing the boundaries around this, and you can get involved in that quite quickly. But yeah, just be a little bit wary about what you give it access to. And some people are like hooking it up to trading venues, all this sort of stuff. Interestingly, it seems as though, obviously these agents are still not the best traders. They're not making the best money when it comes to that sort of stuff. They're good at a more defined project rather than real-time analysis. Grok is trying to make a push into this.
Yeah, 4.2 has made 35% in a month.
Which makes sense because I think he's got the best data set for real-time information. Yeah. And I think that is going to be very, very useful. I do think that Grok has got a chance here of being the best, the best data set for trading. So we'll see.
You can just gauge sentiment in real time and trade off of that, which has been done in the past. Then the next big theory, again, we are facing, people... After 2025 was a lost year, if you were all in on Bitcoin or crypto, you got hurt. And now people are doing very hard reflection as to how they allocate. And we talk about this all the time, but the issue keeps coming up all the time. We are seeing the scarcity thesis, which I buy into because in the world of abundance with AI and HF, what did I just do here? What happened? Hang on, we lost their slide. Jumping ahead. Maybe, I don't know, somebody jumped on the keyboard. Scarcity in the age of abundance and AI. is going to be very important because AI cannot create things that are scarce. Then we have crazy innovations happening all over the world in this whole AI world, singularity world, robots, etc. And then we have AI. People are trying to figure out what to do next. Now, if you look at China believe they're going all in on humanoids. As Elon Musk said, humanoids have the ability to explode GDP of a nation. China have challenges. They don't have enough young people. They need robots more than anybody. And they have now 140 different robot companies across the country. And they believe, and Elon Musk said, Chinese kick ass when it comes to building things like this. So the question is, what does the future look like when we've seen what China can do when they put their mind to something and it's kind of like state sponsored to go all in on humanoids. Humanoids can change the world, not just help you with maybe your trading, but also empty your dishwasher and who knows what else. CTO, Era Digitalis, robots, humanoids. Talk to us.
On your first slide, the previous slide first there, I think a key word that I think about every single day is assets. I think that's a great way to think about it. So AI can do a lot of things. They can't copy the assets. So we just talked about, like, Elon Musk has a data set. He has the X data set, which is very valuable because then maybe, his AI can use that data set to make faster reaction, for example. So that's one asset. There are many other assets. The most obvious one is obviously financial assets. The AI can't go in and just copy that. It's not copyable. And there are many other assets like contact networks, trust, audience that we have here on this show. So there are many kinds of assets that AI cannot copy. And I think that in this world, it's necessary to go up each and every single day and think about, how do I build assets today, one way or another, because that's what remains. And then we can use those assets with AI, with innovation, with all the leverage that we're getting now, and take advantage of that. So that's on this slide. I think that's a helpful. Many people found that perspective helpful. Learning some skill which AI can do better is not really it. It needs to also, you need to build assets or learn how to build assets.
In fact, that's a theory, because at least in the era that I grew up, it was very important to be a specialist, have a very deep domain in one area, whether it be finance or trading or economics or who knows, artwork. But the era of being a specialist is now dead, because it's more important.
Unless we're at the absolute forefront, like the best AI developer or something like that costs 100 million today. So, I mean, but you have to be at the exact forefront where there is no training data.
Yeah.
But if you're like in the group behind where there is ample training data, it's very little value of that. Before society could train someone else, now they can train AI at a fraction of the cost. So there's very little value in being like semi-expert on some skill. Yes, sorry, I just thought that was important on this slide. Then you asked about China and robotics. I have enormous respect for Chinese companies' abilities to build physical products that are cost-effective and pretty good. So for sure, they will give Tesla and Elon Musk a run for their money. I think it will come down to how good the AI is, and I imagine with humanoid robots, you have to be pretty careful. It cannot go haywire, preferably.
Yeah.
So those kind of things.
Yes. Crazy times. Marty, as a technologist, humanoids taking over the world. We just got notified that, Elon's going all in on building a moon base instead of Mars. Mars is too far. The window to get there is too slim, once every 2 or 3 years, if I recall. But now building a moon base, which will become a fab to build semiconductors, to build a space-based data centers, and what do you call that? sling that sends things back to Earth. Crazy, crazy world. How much of this is real? And when will it arrive?
Once again, I think the data has been very missing. People have very little idea about Chinese national priority. They made a strategic national priority last year, 2025, in autonomy and humanoid robots, when we were still talking about other things. So China is very far ahead. I think they run 90% right now. They've captured 90% of global humanoid robot sales since 2025 through 6 of their top selling firms. I think it's Unitree, AG Bot, UBTech, a couple of other ones. And we need to be aware of what they can do and what they can't do very well. But China has made a strategic decision to do this, unlike the US. So Musk is very much reiterating that. So they have this thing called the 14-year, 5-year plan. It's called Robot Plus Initiative in China. Beijing designated robots and embodied AIs as a core future industry in this 14-year plan. So they've made it a top priority. But we need to look at what they can't do. And just remember, they use robots to build things. So it's manufacturing. What they can't do is they can't do things like household chores, construction, plumbing, electrical work, nursing, elder care, things that require touch, strength, dexterity. They can't do cooking, cleaning, restaurant work, agriculture, picking delicate fruit, anything relying on prolonged outdoor work. They need their batteries recharged and things like that. So the gap is still very large. But what they are very good at is building things, and so manufacturing. So if the US has any serious strategy to reindustrialize, which I believe Trump has, robotics is a major part of that, and we need to have a similar strategic initiative to do that.
And there's two players. There's China, and there is Tesla. That's it. So one of the things that I do urge people is have exposure to humanoids, because over the next 5 years, that will be a big play indeed. All right, next quick story: inflation versus deflation.
Oh God, I saw this.
Yeah, this is scary. There are 2 types, and Amanda, this is probably in your wheelhouse too. There is a good kind and a dangerous kind of inflation. First of all, the deflation or disinflation, whatever you want to call it, is when demand collapses. People have no money. They can't buy stuff. Companies have to cut prices. Profits go in the toilet. Layoffs. It's a vicious death spiral. And the good type is when you got technology driving prices down. It could also be driven by AI. A massive increase in supply and efficiency and effectiveness allows companies to produce more, and that brings prices down. So is this a concern, this deflationary crash? If you look at US government statistics and say, oh, it's north of 3% or whatever. No, this trueflation stuff is kind of dialed in and blockchain based. Are we having a deflationary crash, or is this a technology advancement bringing prices down, and should we be concerned? It might be muted.
So if you actually look at the numbers here, this actually isn't driven necessarily by AI. It's driven by energy costs and driven by housing costs.
Yep.
So if anything, this is pre the big AI move. So what you're starting to see is lower inflation because of those 2 things coming down. And I mean, that's what they're saying. And you can see it in the data, but yeah, like with the number of white collar jobs which are potentially affected by this AI move, there was another really good chart recently, which is commits on GitHub. If you type that in, you can see it's gone literally exponential until since Q4 of last year, because everyone's downloading agents and Claude Code and all this. The ability to spin up your own vibe coding, anything, has really increased. That there's no doubt about it. In the businesses that I use, that I'm involved in, we've got rid of certain SaaS products because we can just make them ourselves now very, very quickly. That's not just hyperbole as well. Like, it's very easy to recreate some of the SaaS tools that businesses were paying, hundreds, thousands of pounds a month for. So I think the SaaS sell-off in stocks is real. I do think that there is a real the costs to different businesses are going to come down with AI. There's no doubt about it. And you're starting to see that extend beyond just, I can replace my lawyer, to being like, I can actually replace all of my tech now, or big bits of my tech. So I think that this figure could actually keep on heading down. Like, I don't think this is we're getting to 0.68. This is just with housing and with energy that this has happened. So I think we could end up with close to 0% pretty soon.
Yeah, and we saw the SaaS apocalypse over the last month, and then last week we saw information providers getting hammered because now people can go on AI and mine their own information. They don't need LegalZoom or other Wolters Kluwer's type providers, which is also rattling things. You did remark, Marty, this scared you. Why did it scare you?
Well, I mean, there's good and there's bad deflation, right?
Yep.
I think that's the important point to take away from this. If we have, it's all about the Fed and the monetary policy. So remember, we increased rates to stop inflation. So the worst thing we can get is stagflation. So if the Fed continues to increase rates to lower inflation, that's going to create what you just said, which is a tight policy, layoffs, things like that, the bad kind of disinflation. But if we're getting disinflation from productivity increases, lowering energy costs, automation and AI, like Mando said, then it's a good type of disinflation, which is great. So right now, I think we're stuck in limbo with a Fed change where we don't really know the sort of motivation of the incoming Mr. Walsh, and whether this is purely bad disinflation or good disinflation. I mean, if they keep lowering rates, possibly this is a good disinflation. If we see positive ROI from automation and AI, then this is good disinflation, which means a lower cost of living, higher wages, more hiring. It's good for everybody. But if it's bad disinflation, then it's bad. And we don't know right yet. And I think that's a lot of the uncertainty in the market.
Yeah,
not quite sure. We've got this surge in technology to increase ROI and productivity, whilst this strange politicized Fed and monetary policy, and we're not quite sure of the incoming Walsh and what he's going to do, and obviously the Trump effect. What is Trump's motivation here? So I think it's a strange time, but definitely the numbers have never been this mismatched. 2.7 CPI being reported by the government, 0.68 being reported by Truflation. I've never seen it that mismatched, and that begs to ask the question: what's going on? Why is it so different? Where are the numbers wrong?
Excellent. Thank you for that, guys. Final topic, and we'll make this real quick because we're at an hour already. I want to thank everybody for being here. Links below for all these legends. You can watch us anywhere, and big thanks to the mods as well. Real quick, 30 seconds or less. CTO, to you first. A lot of people are concerned. They pin their hopes on maybe altcoins and down 70%, or maybe in some cases even a lot more. Even having Bitcoin didn't save your portfolio. What is the plan for 2025? We talked about kind of rotations, having exposure to maybe some of the biggest thing that's going to happen to the planet is both AI and humanoid robotics. Maybe get some of that exposure. But what do you advise? My short lesson is, stop the bleeding, cut the ghost chains, cut the losers. Hope is not a strategy. If you're down 70%, you need your asset to go up 230% to break even, and that is a big mountain to climb. Some things never recover. And should you be rotating capital? What do you tell your audience?
Yeah, I think a tip is to look forward. Like, forget a little about the history. It's a new year. Whatever happened. Now look for the next wave, the next opportunity, the new setups. The market doesn't care about what price you bought something. It's not relevant. So look forward, look for new opportunities. That's what I'm going to do. New great setups is going to present themselves. There's going to be crashes. There's going to be FUD. There's going to be some crisis at some point of the year. And that's when I'm planning to, try to buy those opportunities. That's my plan for the year. And whatever we did wrong last year, forget about that. Now look forward. That's my tip to everyone.
Yeah, we just broke 70K on Bitcoin.
Just broke 70,000,
which is nice. We'll take that. Mando, you next, real quick. What do you advise people? I know we don't give advice, of course, but people are struggling here. what to do, how to prepare the mind psychologically, start cutting some losers, rotate? What do you think?
I mean, always cut losers. That's like obvious, particularly in altcoins. I would say that right now, I actually think it's a really great opportunity to start trading. Also, just change your mindset slightly. Like, I just think that an asset class which you think is going to be around for a while, for a long time, is just dropped 40, 50%. That's a great opportunity.
Yeah.
Like, it's actually a great opportunity. People want to think in terms of a sprint, and actually you've got a marathon to make money here. And the fact that it's down and you now have an opportunity, like I look at Bitcoin, even though I think right now we're in a bit of a downward trend, like the trend is still down. I look at it and think, back at 60K, like people are going to go like, this can go to 100K again. Something about when Bitcoin was at 100K meant that everyone had to say it's going to $1 million, you know? And now it's back at 60K. Like, I think there's quite a nice risk reward again. You go like, okay, well, this could easily happen. You know, this could easily happen. So I think the medium-term narrative is back with Bitcoin in that you have decent upside as just if this catches fire again. I think we need the world to slightly implode, but even during this period of like, I think Bitcoin stays in this channel that we've just spoken about. Normally you have really good altcoin moves as well. Like something will catch and move during this sort of time. So that's what I'm really looking for right now. I'm going to trade the ranges, which is this low 60s, high 50s Bitcoin is when I'll be buying it. And then other than that, I'll be looking for big breakouts. And you can make it back in one trade. The volatility can be very, very high during these sort of periods.
So that's interesting. Learn to trade. Start trading. I like that. But also now you have AI level tools to give you an edge, which people should lean into as well. Would you say, Mando?
One thing, and I have a friend of mine who keeps on ruining his trades. He keeps on picking the right asset, often in terms of narrative, and then not trading it well. Like either exiting too early or then getting back in and ruining the trade. Like this is what I see with the number one issue with people. With
timing. Timing is everything.
But it's discipline. You like whenever you go into a trade, just ask the AI, like set me up like with the discipline exactly of when I should get out, what should be the upside. So like if you think you're good at picking assets which are going to move, then take away the execution from yourself. A lot of PMs actually do this. So like they will give execution to somebody else. Like they'll be like, I like this trade, I'll give you the execution. You can do that with AI really easily now. If you're really good at the execution but terrible at picking the assets, you could also ask AI. So, but one thing I said to him is like, just go to AI and be like, look, I keep on doing this. Can you set me up exactly with how you would set up a trade? How you get into it, how you get out of it, what prices I should have for my take profit, what price I should be to get out, whether it should be a dynamic take profit or a dynamic stop loss, all of that. Just give it because they'll give you institutional level setups. There.
And that's great because the biggest problem, with your friend and other people have is emotions.
Right.
But if you delegate to an AI or a PM or a machine, that removes the emotional machine, which gives you that edge. Very good point.
I don't know if they're the best at trend following, but they are very good at giving you the discipline around how to set up a trade.
Awesome. Thank you. Last one, Marty.
Sure.
Rekt recovery survival guide. Give us your take.
Starting with the basics, sell high, buy low. I think people still don't do that. In the short term, that's obviously the mantra. But this is a long-term investment. I mean, this is novel technology. There still is not a regulated market. Until market structure passes, this is an unregulated market. So there's going to be manipulation. And you need to accept that. And you need to divorce that from your ultimate conviction, which is that this technology is good. It hasn't changed. In fact, it's only improved. So in the long term, for me, example, I hodl Bitcoin, Solana, and Sui until 2030. And I'm untethered. I'm not changing that. I will not sell those long-term bags until that happens, 2030, and by hell or high water. Now, all I do in that case is accumulate on the lows. And how do you do that? It's simple. When there's euphoria, you sell. When there's fear, FUD, and uncertainty, you buy. And nobody on this call can admit that this is not the worst sentiment in crypto history right now. From Main Street to crypto Twitter to the man in the street. This is the time to buy, in my opinion. This is when you lower your prices, you lower your average cost. And when is the time to sell and to potentially take some profits? When people are euphoric and it's going to the moon. And we were there at 126. So it's been very predictable. The problem is people get emotionally caught up, get fixated with the timeline and the narratives, and forget these basic mantras. Just write them on a post-it notes on your computer. Sell high, buy low. Have a long-term strategy. Nothing's changed. Literally, I follow the wallets of the large participants. They have only accumulated more. BlackRock, Coinbase, Binance, Sailor, the big participants have only increased their token numbers during these fearful times. They have not sold. If they start selling, then we will be on the show here with a different story. But until then, they are completely playing you. You're being shaken out. Don't get shaken out. Okay, think like the syndicate.
As Manda said, that big whale move, biggest one in over 4 years, $5 billion in a day. Big move. Sailor keeps buying the top like he promised he would, and getting fleeced by OTC desks.
And I mean, obviously, James, we have to mention it again. High leverage is an absolute trap. Any playing with a high leverage is the problem. Do not play with high leverage. Basically, leverage is simply loaning money. It's a fancy word that means bank loans. You're loaning money at a ridiculous interest rate. Stop doing it. You don't do it in your life. Don't do it in trading. Don't use high leverage. Low leverage or spot buying is the way to go. Timing your entry is the way to go. When do you time your entry? When everybody else gets liquidated. When everyone else gets liquidated, that's when you enter. That's the basic thing. It's very, very effective.
When fear is 6, that's your signal. And we had that last week.
And take profits. Take profits.
Thank you so much, Mando, Marty, CTO. The last part of this segment is actually very powerful. People should take notes. Listen to all of these little tips from these folks. Thank you all. Have a great week, my friends. Don't forget Legends. Their links are below. Follow them all and have a very well-rounded approach to this AGI, AI singularity world that we are in, ladies and gentlemen. Thank you all. Have a good night. Bye.
Thanks, guys. Thanks for seeing you. We have big days, man. Tomorrow, Wednesday and Thursday, we're doing a Solana breakout on Spaces, the first metaverse crypto conference ever. I think we're going to try and break Spaces, so that should be fun. And then I'll see you guys next week on Monday, and I think things will be a little bit different. So there we go.
Fingers crossed. Thanks, team. Bye.
Thanks, everyone. Bye.